Welcome to our new IFRS Education Front series. It's an initiative of OJ Inspiration Limited. It's dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multiple choice question and answer approach. It's intended to make learning verification, mastery, or intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to which the answers have been provided on IFRS 15. This is standard on revenue from contracts with customers. Viewers or subscribers have 30 seconds to select or choose the answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. A change in the price of a contract that is approved by the parties to the contract is called A. Contract modification, B. Contract alteration, C. Contract termination, D. Incremental contract, E. Onerous contracts, and counts. 10 seconds gone. 20 seconds gone. Time up. Question number 12. Which of the following is not used to describe contract modification? A. A change order. B. A variation. C. An amendment. D. A revised order. E. None of the above. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 13. A contract modification could be approved A. By implied customary business practices. B. By oral agreement. C. In writing. D. A and C. E. All of the above. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 14. One of the following is not considered in accounting for a contract modification as a separate contract. A. The scope of the contract increases because of the addition of distinct promised goods. B. The scope of the contract increases because of the addition of distinct promised services. C. The price of the contract reduces. D. The price of the contract increases by an amount of consideration that reflects the entity's standalone selling prices. E. The price of the contract is adjusted to reflect the circumstances of the particular contract. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 15. An entity accounts for the effect of a contract modification in one of how many ways? A. One way. B. Two ways. C. Three ways. D. Four ways. E. Five ways. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 16. A contract modification leading to the termination of the existing contract and the creation of a new contract is done when A. The past goods transferred are the same with remaining goods. B. The remaining services are distinct from the past services transferred. C. No goods or services to be transferred from the date of modification. D. The amount of consideration remaining after modification is unchanged. E. Previous goods supplied by an entity are not returned. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 17. An entity accounts for a contract modification as if it were part of the existing contract if A. The remaining goods are distinct from goods earlier transferred. B. The remaining services are distinct from services earlier transferred. C. The transfer of the remaining goods are stopped. D. The remaining goods are not distinct from the earlier ones. E. The price of the contract increases by consideration amount that reflects the entity's standalone prices for increased promised goods. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 18. If parties to a contract have not approved a contract modification, an entity A. continues to apply IFRS 15 to the existing contract. B. applies IFRS 15 to the contract modified. C. discontinues the application of IFRS 15. D. derecognizes revenue and cash of performed obligations earlier recognized. E. applies provision requirements of IAS 37. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 19. If the parties to a contract have approved a change in the scope of the contract, but have not yet determined the corresponding change in price, an entity A. continues with the transaction price before contract modification. B. does not consider transaction price in revenue recognition. C. stops revenue recognition on the contract. D. recognizes revenue on cash basis. E. estimates the change of the transaction price. And counts. 10 seconds gone. 20 seconds gone. Time up. Question number 20. Increase in the scope of a contract as a result of addition of primary services that are distinct is associated with A. contract modification terminating existing contracts. B. contract modification accounted for as a separate contract. C. contract modification terminating existing contract and creating a new one. D. contract modification that serves as part of existing contract. E. all of the above. Some counts. 10 seconds gone. Twenty seconds gone. Time up. We proceed to review the answers. Question number 11. The answer to question number 11 is A, contract modification. A, contract modification. Contract modification is a change in the scope or price, or both scope and price of a contract that is approved by parties to the contract. A is the answer to question number 11. Question number 12. The answer to question number 12 is E, none of the above. E, none of the above. A contract modification may also be referred to as a change order, a variation, an amendment, or a revised order. E is the answer to question number 12. Question number 13. The answer to question number 13 is E, all of the above. E, all of the above. A contract modification could be approved in writing by oral agreement or as implied by customary business practices. E is the answer to question number 13. Question number 14. The answer to question number 14 is C, the price of the contract reduces. C, the price of the contract reduces. When the scope of the contract increases because of the addition of promised goods or services that are distinct, or where the price of the contract increases by an amount of consideration that reflects the entity's standalone selling prices, or the price of the contract is adjusted to reflect the circumstances of the particular contract, contract modification is accounted for as a separate contract. Where the price of the contract reduces, contract modification is not accounted for as a separate contract. C is the answer to question number 14. Question number 15. The answer to question number 15 is C, 3 ways. C, 3 ways. An entity accounts for the effect of a contract modification in one of 3 ways. They are: 1, accounting for it as a separate contract. 2, accounting for it as if it were a termination of the existing contract and creation of a new contract. And 3, accounting for it as if it were part of the existing contract. C is the answer to question number 15. Question number 16. The answer to question number 16 is B. The remaining services are distinct from the past services transferred. B. The remaining services are distinct from the past services transferred. An entity accounts for a contract modification as if it were a termination of the existing contract and the creation of a new contract if the remaining goods or services are distinct from the goods or services transferred on or before the date of the contract modification. B is the answer to question number 16. Question number 17. The answer to question number 17 is D. The remaining goods are not distinct from the earlier ones. D. The remaining goods are not distinct from the earlier ones. An entity accounts for a contract modification as if it were a part of the existing contract if the remaining goods or services are not distinct from the earlier ones transferred. D is the answer to question number 17. Question number 18. The answer to question number 18 is A. Continues to apply IFRS 15 to the existing contract. A. Continues to apply IFRS 15 to the existing contract. If the parties to a contract have not approved a contract modification, an entity continues to apply IFRS 15 titled Revenue from Contracts with Customers to the existing contract. A is the answer to question number 18. Question number 19. The answer to question number 19 is E. Estimate the change to the transaction price. E. Estimate the change to the transaction price. If the parties to a contract have approved a change in the scope of the contract, but have not yet determined the corresponding change in price, an entity estimates the change to the transaction price arising from the modification in accordance with the provisions of IFRS 15. E is the answer to question number 19. Question number 20. The answer to question number 20 is B. Contract modification accounted for as a separate contract. B, contract modification accounted for as a separate contract. Increase in the scope of a contract as a result of addition of primary services that are distinct is one of the conditions to be fulfilled for a contract modification to be accounted for as a separate contract. B is the answer to question number 20. That is all for this set 2. Thank you for joining us for the set 2 of IFRS 15, Revenue from Contracts with Customers. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all of the subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Inspection Limited. Thank you once again and bye for now.